Hello, traders. Gary Wagner with the Silver Forecast, the 11th day of March. It is Friday and approximately 10 o'clock in Honolulu, Hawaii. This is the daily report, our weekend review for the Silver Forecast. First of all, I do want to let everyone know that our hearts go out to those in Japan who have suffered a great tragedy. We do wish them the best and a speedy recovery. To the markets. Silver, after a one-day fairly sizable decline, has come back and come back strong, currently trading up about 65 cents, and it's trading almost at $36 per ounce, $35.90. We are looking at a daily chart in Henkin format. Each candle represents 1 day in time. Each candle is done in the Henkin manner, meaning it is an average chart. Here's what I'm finding interesting this morning. Now, I've gone ahead and blown this chart up. We're still looking at our daily Henkin chart. But what I am finding interesting right now is the candlesticks, the Henkin candlesticks that we have seen over the last couple of days. In both cases, they have had extremely volatile lows. They have had a fairly large range when you take a look at the high down to the low. And then lastly, the small bodies, the relationship between the open and close, even in the Henkin chart, even though that has been modified. These are known as, they're hammer-like, but these are rickshaw men. They typically show consolidation in the market. And this is the chart converted into candlestick format. As you can see, some of the candles look similar. Some of them look very, very different. In terms of a difference, you can see this was much more of a hammer or hangman-like candle when we looked at it through the Henkin format. But either through Henkin or through a candlestick chart, this last day has got the same sort of strategy in terms of the psychology that's very, very interesting when you consider the following. The market opens, it begins to trade higher, it forms a high at some point during the day, but most importantly, at some point during the day, the traders really push this down and they make an extreme low on the day. Now, this is what makes the candle, and whether it's in Henkin format or in candlestick format, so significant. Even though the market comes down and they make this new low on the day, buying ensues, whether it is short covering, buying the dip mentality, safe haven mentality. Simply put, traders come back in the market and they push the market not only to the open, but above the open with that very, very narrow range. That is what is so indicative of this type of candle, and that's what makes it so important and such a signal that is strong in terms of indicating bottom activity. You know, silver has been on such a very, very strong tear that any kind of retracement can be rather short-lived. Now, we started talking on Monday, the first day of this forecast, about the fact that we saw some real resistance when it hit this upper Andrews pitchfork line. We saw highs that were unable to take that out, and then we saw the market trade lower. That was yesterday. We've seen it recoup again today, and my sentiment is this. For the marketplace to make new highs, and realize we're at a 31-year high. So it's going to have to come in and test a certain area. It is known simply as a scouting party by Steve Nissan. In other words, we're testing the fortitude of the market here and the sellers here. In other words, when the markets do reach a certain point, these are those highs, you do get selling coming in the market and pushing it back down. We had a profit-taking session yesterday. We have had covering and fresh or safe haven buying, come into the market today and push it back up. My sentiment is this. I believe that next week we will take out these highs. I think that the market is probably at this point going to be headed higher, and most importantly, I think that it is going to break above this channel line that we've drawn in our Andrews pitchfork. Now, this is our weekly chart in candlestick format. And as you can see, it is Friday, so we have our complete candle here. It is a star-like candle. In other words, the open and the close are relatively close together. As you can see right here, it does look like, because it is red, it is going to be a higher close when compared to the open on Monday, but it is a star. Now, realize, as I said before, these stars are significant, but they're most significant in normal trending markets that have defined ranges in picking tops and bottoms of the market. When we see a market that's really a runaway market, and there's no doubt when we look at silver, we can only ascertain one thing, and that is that it has been almost a linear move up, a straight move up, as you can see like this, so that the only correction that we have really seen is this one area here, and that's when it hit about just below $31 and then came back down to test at 27. We'll have to see what pans out, but I can tell you this. I do believe that there will be opportunity in terms of higher prices, and I think that we will go ahead and test this 31-year high next week. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you on Monday for another daily report. Bye-bye.